Hello.
Morning.
Okay, thank you for that. Yeah, good morning once again. My name is John Mutua. I work at the Institute of Economic Affairs as a programs coordinator, and I also head the program on public finance management. I would like to welcome you to our 19th webinar series since January. And today we'll be discussing or sharing some highlights of the Economic Freedom Index 2021, sharing some results and observations on Kenya in relation or in comparison to the East Africa Community member states. Just to mention, of course, the Institute of Economic Affairs is a think tank that promotes debate and dialogue on public policy issues. And so today we'll be discussing this. And we have two of my colleagues, Jacqueline Kagume and Leo Kemboi. They both work in the Constitution Law and Economics program that's headed by Jackie. So as you can see from the program, they'll be taking us through this. Now, as a way of introduction, I know on Twitter, largely on social media, when what you tend to see in terms of comparison between or among countries, often in terms of development, people often look at things like infrastructure development, mainly roads, road network, rail network and the like, as well as even things like skyscrapers. Those are often seen as indicators or indicators of development. Whereas, of course, infrastructure development is important. It only tells one small part of a country's economic growth and prosperity. So today we'll be sharing something that speaks more into fundamentals of economic growth and prosperity, or some foundations to that. And obviously it's not the only one, but by the time we are done with the presentation, you'll be able to appreciate the fact that in terms of just comparing countries on economic growth and prosperity, it is obviously much wider than just looking at issues of skyscrapers and road networks or just infrastructure development. Now, obviously, this index, and I will not go into the details of this because Jackie and Leo will break it down. They will share some of the nuts and bolts about the index, what the index is all about. So just Jackie's presentation, which will take about 20 minutes, will focus more on the background, methodology, and a summary of the results. And then we'll have some more details from Kemboi, looking at the results for Kenya in comparison to those of our East Africa colleagues or neighbors. So the total of the two presentations will take about, I think, 40 minutes, or just slightly more than 40 minutes, maybe about 50 minutes. And then thereafter, we'll have a plenary session for about another, from the program, for about 40 minutes. And then, of course, we'll wrap it up by around 11:30. So I will not go into the details of what economic freedom is. I believe Jackie will explain and give us the details of what or the nuts and bolts of economic freedom index together with Leo. So before we get started, just to mention, I know we are all increasingly familiar with the housekeeping, or just got into the drift of webinars. So I would like to ask that we all keep our, or request that we all keep our mics muted. And then please You can utilize the chat box during the presentations to note whatever comment or question that you may have. And then we'll revert to those questions during the plenary session. Thank you. So I would like now to invite Jackie.
Okay, thanks, John, and good morning, everyone. As John has kindly introduced me, I'm obviously Jacqueline Kagume, and I'll be making the first part of today's presentation, which should be popping up on the screen now. So, as John has put it, my colleague Leo and I will be discussing today the 2021 Index of Economic Freedom. And so basically what we'll be doing is to share what exactly the report is about. So, and then we'll discuss the broad results and also look at specific results from Kenya and the East African Community region, as well as a comparison of performance of other countries in sub-Saharan Africa. So I'll just go straight to the presentation. So move to the next slide. So, sorry, the slide before. So that's just the cover of the report for this year. So it's prepared by the Heritage Foundation, which is a US-based institution, and they've been preparing this report since I believe 1995, but I'll talk about that in a few moments. So next slide. So this is the outline of our presentation today. I'll basically provide an introduction, and here I'll define some key terms and try to explain a bit of the background to the index. And then I'll then discuss a bit of the methodology in terms of how the index is developed and some of the key indicators, or what they call factors, that are used to measure economic freedom. Then next, we will look at the summary of results, where I will outline the global performance, looking at regional variations and regional averages for 2021. Then after that, my colleague Leo will come in and discuss specific results for Kenya. And he will then also discuss Kenya's performance versus that of other economies in the East African community. I think we've already mentioned that. And Kenya's performance versus that of other sub-Saharan African economies. Lastly, he will discuss the conclusions, and that will mark the end of our presentation. Next slide. So, in terms of an introduction, I'll start with the basics. So we're discussing today the 2021 Index of Economic Freedom. And here I'd like to make an assumption that perhaps there may be one person in this meeting who has not interacted with the index or who doesn't know what it's about. And so I'll try to explain from that point so that we are all on the same page in terms of what the IEF is about and why it's significant. So at its most basic definition, an index is basically a measure of something. And in the context of economics, it's a statistical measure of the performance of an identified subject area. So here we can talk about different economic, an index on different economic trends, with market prices, an index on the performance of different institutions. And for those of you who've been interacting with IEA for long enough, you know that a couple of years back we did Kenyan Urban Areas Performance Index, basically trying to sort of rank the performance of different urban areas in Kenya. So an index is basically a measure of a statistical measure of a certain identified subject area. So because today our reference is the Index of Economic Freedom, someone may then ask, what exactly is economic freedom? And the definition that is provided by the Heritage Foundation which, as I mentioned, is the institution that has been developing this index for the last 26 years. They define economic freedom as the right of every human to control his or her own labor and property with as limited restrictions as possible from government. So in an economically free society, individuals are free to work, to produce, and to consume, and invest freely. And governments also allow for labor, capital, and goods to move freely without unnecessary. So that's the definition of economic freedom. So I've defined an index and economic freedom. So looking at this together, the index of economic freedom is basically then a measure of the performance of different countries or jurisdictions against each other in terms of how they perform in terms of the rule of law, trade freedom, tax burden, judicial effectiveness, and other indicators or factors that I will define in the subsequent slides. These factors are weighted according to their influence on economic freedom, which I have just defined, and they are then compiled into a single score that allows for a ranking. So, as I mentioned, the index has been published by the Heritage Foundation since 1995. So by now we should have about 26 issues of the annual report. And it covers 12 economic freedoms. And these are classified under 4 broad categories, which is on the rule of law. So the main categories are on the rule of law, government size, regulatory efficiency, and open markets. So I'll discuss this a little more in the methodology, but before I go to this methodology, I'd also like to state here that for this index that we'll be looking at today, the 2021 index, most of the data in the report covers the second half of 2019 through to the first half of 2020. So to the highest extent possible, the information that is considered here was current as of last year, 30th of June of last year. So that's the report that we're looking at. So now going into the methodology in terms of how this index is prepared. The index measures economic freedoms based on 12 quantitative and qualitative factors, which are grouped into those 4 broad categories that are highlighted on your screen, or what they call pillars of economic freedom. So as you can see, the broad categories are rule of law, and within here, under the first category, the index measures property rights, government integrity, and judicial effectiveness. Then under the second category, which is on government size, the index measures government spending, the tax burden, and fiscal health of any state. Then for the third category, which is on regulatory efficiency, the index measures business freedom, labor freedom, and monetary freedom. Then lastly, under the fourth category, which is on open markets, the index measures trade freedom, investment freedom, and financial freedom. So you can see that we have 4 broad categories with 3 freedoms under each, bringing it to the 12 factors or indicators. However, you may like to refer to this. Then now going into specifics on how the index is measured, just go to the next slide. So under each of these factors, we have several sub-factors. So it's they call them, the Heritage calls them either factors or indicators. So under each of these indicators, we have several, or rather factors or indicators, we have several sub-factors that are considered. And you can see that there are quite a number as you can from this table. And I will not go into the detail of all of them. So within the 12, we have quite a number of things that are key considerations for this index. So I'll just give, I will not go into detail for all of them, but I'll just give some highlights. just to give a clearer picture of the main considerations. So, for instance, under the rule of law category, you see that we have judicial effectiveness being one of the indicators or factors that are considered. And here some of the sub-indicators are judicial independence, the quality of the judicial process, favoritism, among other sub-factors. Then under the government integrity factor, you see that some of the sub-factors include irregular payments and bribes, transparency in government policy making, the absence and perceptions of corruption, among others as well. Then some examples that I'll highlight for the second category, which is on government size, looking at the government spending as an indicator. Here they consider all government expenditure as a percentage of the GDP. Then for the fiscal health factor, some of the key considerations include average deficits as a percentage of the GDP and debt as a percentage of the GDP. Then some other examples under the regulatory efficiency category. So here we have business freedom is one of the factors that is a key indicator here. And here some of the sub-indicators include that are measured, include time, cost, and procedures for setting up a business. Then under the labor freedom factor, some of the key sub-factors include labor force participation rate, the rigidity of working hours, difficulty in firing redundant employees, and the legally mandated notice period, among other considerations. Then the last examples that I will highlight are some of the sub-indicators within the open markets category. And so here we have various sub-factors within the trade and investment freedom factors. Then under the financial freedom factor, they consider the extent of government regulation on financial services, the degree of state intervention in banks and other financial firms, government influence on the allocation of credit, and openness to foreign competition. So that's just a broad overview of how the index is measured. So those are some of the main indicators and sub-indicators. We go now to the interpretation of economic freedom scores. And so here, having looked at, or rather having considered a country's performance along each of those indicators, scoring is done on a scale of 0 to 100 for each of the 12 freedoms. Then the scale of economic freedom is then derived from calculating an average of all the scores, and the classification is then structured into 5 categories as listed in the table that you can see. So for any country that scores an average between 0 and 49.9 points, this economy is categorized under, this country is categorized under the repressed economies. Then for any country that scores between 50 and 59.9, it's classified under the category of mostly unfree states. And then for the countries that get an average score between 60 and 69.9 are classified as moderately free, while those that score between 70 and 79.9 are classified as mostly free. Then the highest or the best performing, what would be sort of the A students here, for the states with a score between 80 and 100%, they are classified as free economies. And this is essentially a reflection of the ideal economic freedom that all the other states should be aspiring to. So those are the 5 main categories, depending on an evaluation of or an assessment of the performance along the factors that I had referred to in the previous slides. States are then classified under those 5 categories. in the subsequent slides, we'll be able to see how Kenya is performing together with our neighbors, and basically in what category we fall. Then now going to the summary of the 2021 Index of Economic Freedom results. I will start with the global average score. So there's the Kenya score there. So Kenya scored 54.9, which would make it, if you go to the categorization, which would make it be under the mostly unfree category. But let me start with the global or world average score. And the world average score for the 180 countries that were ranked was 61.6. So that would imply that the average performance, or the most economies are categorized as moderately free. So then if we come to the Sub-Saharan Africa average score, it was slightly lower at 55.7. And this implies, again, that the majority of the economies in the Sub-Saharan Africa region are mostly unfree. So then now if we come home and look at Kenya with our score of 54.9, this means that not only do we fall under the mostly unfree category, we are also below the world average score, as well as the average score for Sub-Saharan Africa. So our global rank out of all the 180 countries that were ranked was 100. Kenya was ranked at 138 out of the 180, and our rank within Sub-Saharan Africa was 28 out of the 47 countries that were ranked. So the major obstacles, and Leo will provide more detail on this, but the major obstacles to economic freedom for Kenya that were seen and that necessitated this ranking were poor government integrity. And if you remember my first slides, poor government integrity would affect our scores under the rule of law category. And we were also, another drag or a lag on our performance would be problems with our fiscal health. And obviously this would affect the government sales category. If you remember the classification of the categories and the indicators and sub-indicators thereunder. And the other main drag on our performance was a lack of judicial effectiveness, which would then affect our performance in terms of under the rule of law category. So that's Kenya's performance broadly. Then going to the summary of the economic freedom results now globally. For the 2021 index, Singapore topped the global ranking, and this they did for the second consecutive year with an overall average score of 89.7. So it was ranked as the freest economy. And yeah, so the other countries that were ranked under the free economy category. So we had only a total of 5 countries, and we had only a total of 5 countries under this the free economy ranking. So with a score between 80 and 100. So the others were New Zealand at 83.9 points, Australia at 82.4, Switzerland at 81.9, and Ireland at 81.4. These were the 5 countries that were ranked in that category. But other top performers that were in the top 10 include Taiwan, the United Kingdom, Estonia, Canada, and Denmark. And all of these scored above 77 points. And even though they were not in the free category, they were top performers in the mostly free category, which is the second. Then we had a total of 32 countries that were ranked in the mostly free category, which is the second category. So as I've mentioned, we had 5 in the free category. Then we had 32 in the mostly free. Then we had 58 countries in the moderately free category, which is where we have, which is, again, if you remember, is for the scores between 60 and 70. And then we had 62 countries. This seems to be the category that had the most countries. So we had 62 countries in the mostly and free category. And as I have mentioned here, Kenya was one of the countries here. And then in total, we had 17 countries that were considered as repressed economies. So I'll stop here and I'll ask Leo to take over for the second part of the presentation.
Yeah, so good morning, everyone. My name is Leo Kemboy. I'll be taking you through the second section of the study of the presentation. So just to explain now, to look at the results from the 2021 Kenya economic freedom. This chart compares the world averages and Kenya's score. And in 2021, Kenya's score dropped to 54.9. While the world, and this 54.9 is considered, as per the interpretation that Jackie explained, is considered mostly and free. And to add, Kenya has been mostly and free since 1997, the ranking since 1997 up to present. One most powerful thing that you can see from the chart is that while the world is getting more freedom, the Kenya's ranking is continuing to worsen. If you were to draw, with a trend line, that is more evidence. But what is evident from the chart is that there is a divergence. So the world is on an average, the world is gaining more freedom, while Kenya's ranking continue to worsen. So as you can see, there was that sharp drop between 2016 and 2017, and all through the Kenya's performance on this index has been erratic. Some small marginal gains, and then it reverts back to it reverts back. So that is just to demonstrate that, and the most important thing from the chart is to demonstrate that kind of convergence. So the next chart. So from here, I'll try to look at every score, every Kenya's performance in the 12 indicators, and by each of the major categories. So the first one, on the rule of law, Kenya is ranked as mostly free. Kenya is ranked as mostly free on property rights. But on this one, compared to 2020, compared to the 2020 index, Kenya lost a score of negative 2.8. Kenya is ranked as repressed on judicial effectiveness, so with a score of 41.5, and also ranked on government integrity, it's ranked 29.5. As Jackie had explained on what it means by judicial effectiveness, is they rank what is considered as a factor here that measured is the judicial independence in the judicial decisions. The explanation in the report, judiciary is impartial and independent. It has weak institutional capacity, and this one has the effectiveness, this one is a problem that goes back a longer time, can see it in the issues of case backlogs and that kind of stuff, and that's what has affected the judicial effectiveness. On government integrity, especially irregular, this one is on issues of corruption, irregular payments and bribes, transparency of government policy making, and also the absence now, whether the perceptions of corruption and government and civil service transparency. So, and this one I think is one of the most self-evident why Kenya would rank low on this indicator, is because of what we've been seeing in the past, including even what in 2020 in this second term of the administration, what those kind of payments running into billions, government policy, like most of government decisions, especially that of those aside from the fiscal policy, the rest of government decisions, that transparency expected of governments and the one outlined in the constitution, of course, there's been a huge discrepancy. So on the rule of law, and I think the reason why Kenya ranks high on property rights is because of the constitution. And most of the things in the constitution, like Article 40, and it made that property right the so fundamental and so sacred. And although the courts, even if it's difficult to, for example, for the state or any other person to confiscate or disenfranchise anyone of their property or curtail their, although that one you could go through the court process, but it's very difficult. So one of the things that in the report, that property rights in Kenya are poorly enforced, and that's why Kenya could have ranked higher than that. Also, another thing is that land titles are not secured, and now generally the issue of corruption is more perverse. On the second category, on the left side of the chart, government size. So in government size, as Jackie had explained, you're looking at tax burden, government spending, and also fiscal health. And so Kenya ranks highly on tax burden as 78.7%, and on government spending it ranks 80.2%, and on fiscal health it ranks a mere dismal 12.6%. And on this category, the three categories, on fiscal health, Kenya is considered as repressed on fiscal health. On the tax burden, our tax burden, it's 18.2 as a share of income, of domestic income. On government spending, it's 25.7 as a percentage of GDP, and our budget deficits for the last 3 years have averaged around between 7.5 and 8%. Another thing, public debt is 70.4. So as Jackie had explained, on government spending, what is ranked is the expenditure expenditure of total government spending. Now, also government spending as a share as a percentage of GDP for the recent 3 years, and the tax burden is the top marginal tax rate income on individual incomes, which is 30%. Of course, there are other economies where the tax rate is higher than that, and that's why Kenya ranks highly on this. I know for now that most Kenyans, when they see this kind of a result, that Kenya ranks highly and is considered as mostly free in terms of tax burden and government spending, is that and they will not like much agree with it, but in terms of government spend, we don't, although for our level of income we spend more on government, but comparatively, and for the for the purpose of this index, it's not that more. So on fiscal health, which is deficits for the 3 years, and now the debt as a percentage of GDP, where deficits get 80%, and then debt as a percentage of GDP gets 20%. The reason why Kenya ranks like this is because our deficits, if you consider, and our deficits have been, because what the interest on loans should not be more than the percentage of GDP. So if what we consider a form of health fiscal deficit is between 3.5 and 4. And Kenya, the fiscal deficit in this case has been above 7, and in other cases actually gone up to 9%. So that's why Kenya ranks at this dismal of score of 12.6%. So those are for the first two major categories. For the second two categories, so regulatory efficiency and open markets. On the right side, of the chart, the regulatory efficiency, the business freedom. So business freedom is 56.7, which is considered mostly and free. Labor freedom is 57.1, which is also mostly and free. Monetary freedom ranks highly in this case, and this one is ranked as mostly free. And the definition of monetary freedom is that the inflation rate for the most 3 years, what is measured in the monetary freedom, inflation rate for the most 3 recent years, qualitative judgment on the extent of government manipulation of prices through direct controls on subsidies. Of course, we know that government runs price controls on fuels, electricity. Others include maize, some of the cereals, and also the SOE, state-owned entities, intervention in the economy is big. Like, for example, and marketing boards, like the Ministry of Agriculture Kenya's Ministry of Agriculture has the largest number of parastatals by virtue of those by virtue of those of state intervention in the economy. So on business freedom, one of the things is that what Kenya has improved on, although Kenya ranks as mostly and free on business freedom, and it's lower than the world average shown in those dotted lines. One of the things that has improved for Kenya in the 2021 index is the ease of solving insolvency. And another thing that has improved is the improved way of dealing with construction permits. Those are some of the few improvements, but largely on business freedom, a lot of things need to happen for Kenya's performance to improve in this category. And as you all know, and this one the IEA has emphasized on from time to time, the level of which of regulation, especially in some of the sectors like those of fast-moving goods, is too heavy. You require so many licenses to undertake one, like at small scale level. You require so many licenses to be able to be given permission, a license to undertake that businesses. So that level of regulation needs to be reconsidered. On labor freedom, Kenya is still considered mostly unfree, and although some of the things that the report notes is that the labor force participation rate has improved, but other issues, for example, on the entrance, for example, the issues of unions, the issues of deciding the ratio, the rigidity of work hours. There are so many things, difficulty in firing redundant employees. So those are some of the things that need to be redefined and improved. On the right side of the chart, on open markets. So generally compared to the generally compared to the first chart on rule of law and government size, on regulatory efficiency, Kenya has made some considerable like strides in this sector. However, because as a country, part of what we are competing, for example, for the FDI, for capital, with emerging markets. In this case, these are some of the areas that those emerging markets have as perfected on business freedom, labor freedom, and generally monetary freedom. Because for a country to make that structural transition, it must be a market-oriented economy, and for that to happen, the business, labor, and monetary freedom need to improve considerably. So on the next chart, trade freedom, the investment freedom and financial freedom, and this forms the components of open markets. On trade freedom, what is measured, as Jackie had explained, is the trade-weighted average tariff rate, and now they evaluate non-tariff barriers. So as you all know, Kenya has now had 2 preferential trade agreements, which is AGOA and also under the WTO. So now there are new trade agreements for the ACFTA and EPA upcoming, and parts. So Kenya, in this case, Kenya has made on trade freedom considerable progress. So that's why it's considered as moderately free, which is at 62.2. So, and the next one is on investment freedom, which Kenya ranks 55 at Kenya's score is 55, and this is ranked as mostly unfree, just also like financial freedom, which is ranked at 50. Major challenges. So the report, the average on trade freedom, the average Kenya's the trade weighted average tariff, which is 11.4%, and the number of non-tariff measures that they cited in the report that they counted are 53, which is compared to other economies of our scale, which is still a lot. I think the conventional knowledge on the importance of trade and what trade does to welfare and general incomes in the country is settled, and so this, even what you still hear in this, and part of what is evaluated, what you still hear, for example, things such as buy Kenya, build Kenya, instead of Kenya saying that there are global value chains, and this is what should happen. This is what we need for Kenyan farms to enter those global value chains. Because at present, if you consider, for example, Kenya's private consumption last year, in 2019, which was around 7.9 trillion, that if Kenyan farms were to target this, that's a very small market. But if it's expanded, the if we expand to the global, to enter those, for Kenyan farms to enter those global value chains, a lot will be obtained. So in this category, Kenya ranks lower, as you see from those dotted lines. The next one on investment freedom, where what is measured is the foreign investment is treated, is the national treatment of foreign investment, the foreign investment code, restrictions on land ownership and sectoral investments. How if the expropriations without compensation, and foreign exchange controls, and also capital controls. So our constitution prohibits foreign owners to own land in Kenya, but they can lease, and of course the leasehold period is not, they cannot have freehold, but they can get leases. Another thing is that there are sectors where Kenyan farms foreign investment is restriction on foreign ownership, and it requires, for example, some farms to have at least, in some sectors, I've seen even the one on ICT sectors requiring 30% of company holding to it must be a Kenyan investor. Some of the things is that on investment freedom, the SOEs, the state-owned entities, as this one is from the report, has been identified in the report, that they undermine private sector development. And because you all know that SOEs get preferential treatment. Like in the last 5 years, most SOEs have gotten direct government support, either in form of a guarantee to a financial facility, or just directly from the budget. And this undermines the overall objectives because because if you giving preferential treatment on capital, especially on capital ownership of capital, to state-owned entities, for them it creates distortions, because these farms, they must be able to, farms must be able to compete, to be able to, so competitively, to be able to produce. That inefficiency alone in itself creates distortions in the economy. So the last one is on financial freedom. Generally, what the report says about financial sector, it's stable. It's open to competition. And now, what is measured in the index? It's the degree of state intervention in banks and other financial firms through direct and indirect ownership, government influence in allocation of credit, extent of financial and capital market development, openness to foreign competition, and also the extent of government regulation of financial services. So this one does not need more elaboration. For example, there are things we know there are certain requirements. I know for a fact, and this is my perspective, that there are certain requirements on financial banks, especially on foreign exchange, and this one has been the political economy argument that the monetary policy Kenya has been running all along has been goes back to Kenya's public debt, and generally it has affected how banks are regulated. And if you can see from last year. It's on the average, the global average, and Kenya's average. Kenya and the world average is on the same point. But generally, we know that the perception, the way the fiscal side, the happenings on the fiscal side, has affected has affected how financial sector is regulated. So that's on Kenya's results in the 4 categories. Now in this chart, I compare Kenya and EAC and the East African economies. Kenya is on the blue line. In the EAC, Rwanda ranks first in 2021 at 68.3, followed by Tanzania at 61.3, then Uganda at 58.6, and Kenya has 54.9, and Burundi, of course, at 49.9. So Burundi is the only EAC country, EAC economy that is in the repressed category. Uganda and Kenya are in the mostly and free categories, while Tanzania and Rwanda are in the moderately free categories of economies. And as you can see, much has not been happening in the EAC. Rwanda improved considerably from 2009 and continuously on the overall score. Kenya's performance has been stagnating and in some instances declined. Yeah, so that is for a comparison of the EAC categories. So in the next section, I undertook and I compared the EAC economies on 3 fronts: on fiscal health, on government integrity, and on property rights. So on property rights, Kenya ranks second to Rwanda, and Kenya's ranking in this aspect is a factor can be explained by, first, the progressive rights elaborated in the Constitution, and also that Kenyan judicial system, comparatively to the region, enforces those rights. And if you see Rwanda's category, Rwanda and the rest of the EAC economies were ranked the same up to 2015. From then, as the EAC started to open up and compete for the FDI and generally to try and get most of those investments, the performance improved, and generally that's for whole EAC economies. In this category, with the exception of Tanzania, and on property rights of Tanzania and Burundi, which are considered repressed, Uganda, Kenya, and Rwanda is in the moderately. Rwanda and Kenya are in the moderately free on property rights, while Uganda is in the category of mostly and free. So that's the performance on the property rights. So on government integrity, and as you all remember, the way Jackie explained, and government integrity is measured on the perspective of transparency of government policy making process, the policy making process, the absence of corruption, perception of corruption, also and perceptions of corruption on government, the whole government as an institution, and on the civil service, and also irregular payments and bribes. So on the whole, with the exception of Rwanda, in this case, the rest of the EAC economies rank at below 35 on the score. And in this case, all of them are considered repressed on government integrity. Rwanda, of course, there are political economic questions on how Rwanda operates, and generally that, but on the whole aspect of government policy, the Rwanda stands out as the most transparent in the EAC. The rest of the countries, and I think what has affected the EAC economies is because of the erratic measures. So that, for example, on investment, especially on policy making, so that, for example, for the case of Kenya, because we all live in Kenya, Kenya has had changes. If you consider, for example, on tax policy, the way government has been transparent, whether government has been transparent on tax policy or fiscal policy in that, there has been so many movements in tax policy that are not, most people would say, are not informed, for example, by whether the evidence in itself. So that kind of what exact problem in policy government is solving, and the solution, whether that's the solution proposed addresses the problem, and whether evidence was considered in coming out with that is a major problem. For the case of Kenya, for example, on the issue of corruption, irregular payments, and this has been part of a fiscal on the fiscal problem. How, for example, projects are designed, and these are projects that really affect these are projects that with monumental sums, but in the end, the conception, in the design, conception, all the way to implementation were not properly thought about. And even also on the payment side, the payments became irregular because the constitution was not followed. And so, and if you consider, I think for the Kenya, a lot has to be said about the Kenya's rank, because Kenya, in terms of government size, the government integrity, it's the biggest government. If you consider the expenditure and you compare the whole of with all the EAC economies, Kenya spends more than all of them combined. So, and that's why government integrity in this case matters. So, and as Jackie had explained, this category measures 6 indicators that I've just mentioned. So then now compare Kenya and EAC economies on fiscal health. So this is a new indicator. It was not part of the regional indicators that was introduced. And Kenya is on the blue line that ranks bottom, followed by Burundi, followed by Uganda, and then the next one is Rwanda, and then the leading in this case is Tanzania. Fiscal health, as Jackie had explained, it's about the average deficit for the most 3 years, and debt as a percentage of GDP. So the debt as a percentage of GDP in this score takes 20%, while the fiscal deficit take 80%. We had explained that on the Kenya side, that what is considered the threshold for a fiscal deficit is that the interest on the loan should not be on the interests should not be more than the than economic growth. So if you have an economic growth, for example, of 5%, so the interest on loans should not be more than that. And so if that's how you determine whether, for example, what should be the size of fiscal deficit. That's why for the case of Kenya, a fiscal deficit, the treasury normally in every every budget policy statement normally promises to bring that fiscal deficit to 3% as a share of GDP. In this case, the most recent, the average of the most recent 3 years for Kenya was 7.7%. Compared to other EAC economies. And for this case, if you take the fiscal deficit of 7.7% for the economy, which is the size of Kenya, which is, I believe, the biggest among the EAC economies, that would be a huge sum. So in this case, the three EAC countries, Uganda, Rwanda, and Tanzania, are ranked. Tanzania is ranked as Tanzania and Rwanda. Tanzania is ranked as mostly free, while Rwanda is ranked as moderately free in terms of fiscal health, while Kenya and Burundi are ranked as repressed. Yeah, and fiscal policy affects so many things. That kind of, especially on deficits affect so many things. If you look, it affects private savings, it affects national savings. In the long term, it affects investments. And so it spirals. So I think this is one of the most important indicators. And that's why, just to say, just on a lighter note, that I think that is why we are in an IMF program. And this indicator illustrates out clearly why we have problems with fiscal health. So I also compared in this chart, I'll compare the Kenya, Nigeria, South Africa, and Botswana, just to some select sub-Saharan African economies. One of the things, just to get the gist of what because as Jackie had mentioned, Kenya is ranked 28 out of 47 countries in sub-Saharan Africa. So at least we rank them based on on peers or people would like to benchmark with, on countries we like to benchmark with. In this case, Nigeria, South Africa, and Botswana. So the yellow line, the orange line, is Botswana, which is ranked 67.6, which is moderately free, almost not far from attaining the mostly free rank, followed by South Africa, which is the gray line, which is at 59.7, and also the green line, which is 58.7 for Nigeria. And this is for the overall index. Kenya in this category ranks at 54.9, which is mostly unfree. These three economies, Kenya, Nigeria, and South Africa, all rank below 60, which is mostly, all of them are considered mostly unfree. While Botswana in this case ranks highly than Kenya. The aspect of economic freedom, and the reason why Botswana is out there to be watched. And this is not sound to be ambitious, or you can even see, for example, from the government, maybe it ranks highly because it's a small economy, or it has a small population. But the way governments run things, for example, like on government spending, the way government integrity, on issues like labor freedom, monetary freedom, also issues of investment freedom, and perhaps maybe Botswana's position in the south, that there is a big brother South Africa, which they're all competing with for investors, and also trying to so partly, but Kenya, the Kenya, Nigeria, and South Africa, which all of them are among the top, the largest economies in the top 10, still rank low, and perhaps this speaks a lot into performance, the economic performance, how their political processes work, and in that conclusion. Now, last year there was a question about, because there's need to link this to some why the index matters, and from the report, and even from the Jeffrey Tucker from the Freedom of Economic Education, and for them, because the US has been the US ranking has been declining consistently over time in the last decade, and some of the things that it's a very big discussion in the US, especially why the index of economic freedom is declining. And one economist wrote about why it matters, and that 1 point decline in the index, in the rating, is associated with a long-term growth reduction in the long-term growth of GDP between 1% and 1.5% annually. So that economic freedoms have a direct relation with incomes, and also have direct relationship with prosperity. And part of this was to try and this is what we'll be doing, and part of tracking this index annually is to try and calculate and be able to estimate that loss to Kenya. So I'd shown from a previous chart that in 2017, between 2016 and 2017, the index declined from 57.5 to 53.5, which is a difference of 4. So if you had to calculate the long-term growth, reduction growth, and this is my own estimation, is that the corresponding loss in that time of that period was between 4 and 6% of GDP. So in 2017, at that time, the size of Kenya's economy was 8.17 trillion. And when I tried to estimate the loss in the long term, is that by that decline of 4 points, Kenya would lose in the long term between 3.7 billion and 490 billion. So, and the issue here is the long-term growth. This is so important. In this, even a 0.5% decline in the index of economic freedom, and given that over those 12 quantitative and qualitative factors, means a lot of inefficiency or of sort has been created in the economy. So that's why it really matters. So that output lost is equivalent to perhaps more jobs could have been created, more income, more welfare. So, and this is why this index really matters. Like this just demonstrates the importance, because that it's not more of an abstract. It is something that that loss can be attached to something. Conclusions. One thing that is evident, Kenya's ranking continued to worsen, and Kenya has been ranked as Muslim free since 1997 up to present. And those are 24 years, 24 years now. Other EAC members whose ranking continue to worsen include Uganda and Burundi. Of course, just to emphasize that wherever economic freedoms decline, economic output is lost. And from the chart that demonstrated, Kenya needs to make quick fix on issues of judicial effectiveness, government integrity, and fiscal health. I think fiscal health is part of what the process with IMF is now we are now undergoing. The IMF program, which seeks to address some of the fiscal issues. Now, government integrity is how the question of those issues of payments and bribes, transparency in government policy making, absence of corruption. So whether, and also the how quick, how effective enforcement agencies are. So these three things, the ones in red, are really the issues that affect largely Kenya's economic freedom and needs to be fixed. There's a question of whether corruption in Kenya is so systemic and whether it's so persistent. If you compare I think for me as an economist, from my perspective, corruption, the form of corruption that happens on the fiscal side is a quick fix. Is something that can be easily fixed. The corruption that it's difficult to cure is the one that goes in form of policy corruption, like policy corruption, like government economic policy is influenced in certain direction that it's difficult to change, and that one is even difficult to see. But the one of fiscal, because if parliament has budget making powers, can fix the issue of, if parliament can fix the issue, can discipline spending and make how projects are approved, the process to be more robust. The issue of money getting lost is through that kind on the fiscal side is difficult. So economic prosperity can largely be explained by level of economic freedoms, and even what Jackie explained. When Jackie mentioned those countries, those are the countries that rank the most at the top. Those are countries with incomes of above $40,000 and above, $45,000 and above. And also, Botswana continues to make considerable progress in economic freedoms in the continent. Yeah. So that's my conclusion. Back to you, John. And then the references. Thank you.
Yeah, thanks a lot, Kemboi, Leo Kemboi, and Jacqueline Kagume for breaking it down for us. What the results of the Index of Economic Freedom 2020-2021. I think we have had a good summary towards the end, and I know I've seen there's been an interesting exchange in the chat box, and given the time, I will not necessarily go into providing an additional summary. But we've seen the story of this index. So Jackie painted the story about basically the background of the index, its methodology, and a summary of the results. So where Kenya's ranking in 2021, which is what, 54.9 points, against the top ranked country, which was Singapore, 89.7. So Kenya has been ranked as, in 2021, its ranking shows that we are mostly unfree. And we've remained mostly unfree for about 23 years. So actually, it would be interesting to, or good to know why is it that we've made very little movement in terms of our ranking on this index. And so clearly, of course, both Jackie and Kemboi have shown areas where we need to fix, or areas for action or for reforms. So looking at the four clusters, the rule of law, and government size. On rule of law, so starting first with the positive. The main positive is actually is a measure under regulatory efficiency on business freedom. At least we made some positive change. But the areas that have where Kenya has been struggling, and the reason why our ranking has been somewhat stagnated and declining, whether it's relative to EAC countries and the other countries measured in this index, is our challenge in fiscal health, and that has been clearly elaborated or explained by Kemboi, as well as in government integrity and judicial effectiveness. So those are the areas where we need to reform. So without further ado, I think I will go straight. I will open it up now for Q&A session. And I would like to invite our participants to pose or ask their questions. I know already in the chat box there were some exchanges, some nice exchanges. So, what I will do, if you would like to ask any question to Jackie and Kemboi, please, you can unmute yourself. Otherwise, I'll go straight to the chat box and just, but I would like to give this opportunity to anyone. Paul?
Yes, good morning.
Yeah, good morning.
Yes, my question is, so looking at actually this is a very good presentation, quite illuminating, so thanks to the presenters. My question is mainly again on the fiscal health, because it looks like that's really our key problem. And like the presenters mentioned, it was introduced, that measure was introduced probably in the last 2-3 years. So I have two questions. One, what would be our position if we were to exclude that component, the fiscal health? What would be Kenya's position excluding that component? That's number one. Number two, does the ranking consider how the fiscal deficits actually are incurred in terms of whether they're being spent on productive projects? Because it's possible we may be running high deficits, but possibly also being used on highly productive projects. So that could also tilt the situation. In other words, I'm saying maybe it's not necessarily every time that is a high deficit that is probably a bad thing. It depends on how we are using those funds. And I'm not actually saying we are using them well, but does it consider how the funds are being utilized? Thank you.
Thank you, Paul, for those two good questions. I hope Kemboi and Jackie have captured those. Anyone else?
Yes, can I
Yeah, go ahead and introduce yourself first.
Thank you very much. I'm Abdulrazak Musa. I'm a Deputy Director at the Directorate of International Trade in the Ministry of Trade. And I just came back from Washington end of last year. I used to be the commercial counselor. So I have a history with this index. So when I saw this announcement on Twitter yesterday, I joined. I thought my first curiosity was that, have you developed your own index? But now I notice it is the Heritage Index that is the basis of this report. Number one. So in 2019, when I was in DC, when they were presenting, and I will pose the same questions that I posed to the Heritage team. Because of my trade background, the first question will be under trade reform. And on trade reform, I noticed that they had not really factored in the regional arrangements. But I was glad Keboy mentioned AFTA, but I don't know whether that has now been factored into the index, because we do very well at the regional level. In any case, 40% of our trade is in Africa. And then my second question was, we are number 138 in this index. But if you notice in His Excellency's statements, we keep on always referring to the World Bank Ease of Doing Business Index. So have you guys done, and we are number 56, and we have been improving. Whereas under this index, the situation is worsening. So is it differences in the indexes? Because they also have their own index. You have their own index. Have you done a comparison? Why we're doing very well, or rather improving substantially? I think from 113 in 2013 to 56. And of course, being from government, that is the one that we always cite. We don't cite the Heritage Foundation. Thank you very much.
Thanks, Abdi. Thanks, Musa, for those two questions. The third, anyone else? We can have the third final question in this first round. Yes, Thomas?
Yes, thanks. I've shared a couple of thoughts, I think, on the chat box myself. But I'm just curious, essentially,
Hello?
at the end of this slide on this application.
Thomas?
You can hear me okay?
Yeah, we cannot hear you very well.
Yes.
There's some background noise.
Can you hear me now?
Yeah. Please go ahead.
Can you hear me now?
Yes, we can.
Okay. So I think it's just the Bluetooth speaker that I'm on, but essentially I've shared a couple of comments on the chat box, but I think one of the things that I'm still trying to wrap my head around is trying to understand. So there's a very strong assertion in one of the slides that you make that the index, or rather some of the indices, are a predictor of economic growth or economic performance. But I'm just curious how we arrive at that conclusion, given that, whether we consider China an outlier or many other countries, that essentially whether there is significant government control over the economic activities of the countries, we still see kind of a significant amount of growth there. And then I also did ask the question around whether the index really measures individual freedom or the freedom for corporations. And I think which, to my mind, these are kind of different indicators.
Okay, thanks, Thomas, for those two questions. I will just add a few from the chat. Of course, there was one, I think I saw some exchange between, Thomas raised a couple of additional questions. One that's similar to what Musa mentioned. I think the question of whether we've done a comparison of this index to other indices, or in particular to the World Bank Ease of Doing Business. Let me see. I think for some of the questions, I see Kwame had responded, but maybe just for the benefit of I'll just read them out quickly. also for the benefit of our participants. Yeah, so there is a question of, I mean, from his observation that some of the these indicators are quite conservative. There's a focus on GDP, but not on equality or income distribution, for example. And I think there was a response from Kwame on that. We can refer to the chat box later. Then Alex Njeru. So this is, yeah, Alex's question is similar to what Musa asked. Just the dissonance between this index with the World Bank Ease of Doing Business. What is the reason for this, and what index should the country pivot for meaningful change? Then from Michael Owor, what he mentions is that it looks like the 2010 Constitution hasn't stemmed the tide. Any ideas why? I think there's something that can be mentioned with respect to the Constitution. Kemboy, maybe you can respond to that during the, let me just, I think from Adan Namu, sorry. Kenya has made significant improvements in digitization of government services, which has reduced the extent of bribe giving to get services. How is this reflected? Kemboy and Jackie, you can note that. Okay. I think we can, maybe the two of you can respond to those first, and then we will open it up again for a final round of questions. So let's start with Jackie. You can choose whatever questions you want to respond to, and then whatever will be left. The questions that will not be answered, then Kemboy can go ahead and respond to those ones.
All right. Thanks, John, and thanks to all our participants for the questions so far. So I will start with the question from Thomas, who had asked why we pick on this index by the Heritage Foundation. And his view is that some of the indicators are very sort of conservative. And I will say the reason why we use at IEA, we are interested in this index specifically. The IEA is an evidence-based think tank, and we interrogate whatever data is available before us before we make any conclusions. So from the evidence that is provided in this index, we've been able to see that there's an effect, there's a clear correlation or link between economic freedom and prosperity, and I think we'd already mentioned this. So countries that have more economic freedom, as we had mentioned or illustrated, if you look at the various development outcomes, if you look at the health outcomes, education outcomes, their per capita income, they all seem to be doing significantly better than the countries with the lower economic freedom as defined. So in that case, just trying to link the data that is provided with the evidence that is provided with various outcomes, we find this tool or this index to be objective. Even though, yes, we acknowledge that it's prepared by a conservative foundation in the US, but the evidence that we have points to the fact that it's objective, because we can see that link between the rankings and the various development outcomes. So that's basically, I would say that's why, although my other colleagues present at this meeting can also chip in and add what they think. Then we've had the question repeatedly on the dissonance between the Index of Economic Freedom and the World Bank Ease of Doing Business report. And so first I'd like to state that we have this program has not undertaken a comprehensive comparative analysis between the two indices. However, I would say from the face value of it, the parameters used could be one of the reasons why we see that dissonance. So the parameters are not exactly identical. And so for that reason, we would not expect to have the very same results between the two indices. So while the World Bank's ease of doing business is primarily focused on ease of doing business, when we look at the index of economic freedom, it's more, that is, business freedom is just but one of the freedoms that is considered, even though, yes, there may be a few other factors that are linked between the two indices. However, it's just but one of the main components that are looked at in the World Bank's ease of doing business. So I would say that I think the reason why we may see that dissonance is the broad categories or the broader parameters that are explored under this index of economic freedom. And again, I think any of my colleagues can add, but I'd also like to state that we can undertake as a program to look at it more thoroughly and to see what are the main areas of divergence between the two, so that we can try and evaluate and see what are those main differences. But from the onset, I would only say that the difference would likely be in the parameters for the two indices. Then we had the other question asking about, and which I think John has said Leo should answer, regarding the 2010 constitution and how it may not have stemmed the tide. And then he's asking for any ideas why in spite of a good constitution, we still seem to be ranked as in the, our scores pretty much seems to be the same. We are still in the mostly unfree category. And my thoughts here would be that in spite of a very good constitution, which I believe most of you would know or agree, implementation remains a problem. So if you look at the areas where Kenya's performance seems to be a little dismal, the main area, it's not that we do not have proper regulation or laws, or that our constitution is not comprehensive enough. The main issue is in implementation of the various policies that we have. So for instance, under the constitution, we have an elaborate detail of the public finance management regulations. We see that one of the areas that we've highlighted as causing the lag in our performance is on our fiscal health. And in spite of the elaborate stipulations in the constitution on how the on what exactly should be our PFM principles and how the, public finance management should be undertaken, there's implementation of this seems to be a problem. And here we can also blame Parliament to some extent, given that they have a crucial role in oversight. And we see that even though they have the main role in, for instance, making approvals for all the facilities, the loan facilities and all the borrowing that is done, they do very little to ensure adherence to this. So they've also been approving without much questioning, and in spite of the knowledge that we are faced with serious deficits. So there's a question of oversight by Parliament, there's a question of poor implementation of the laws that we already have. So basically, if you look at all the parameters where we are doing poorly, even on judicial effectiveness, again, our constitution is very elaborate in terms of trying to make the judiciary an independent institution, trying to make sure that the judiciary is well funded. But what's the reality that we see is that we consistently have an underfunded judiciary. And so the outcomes that we see in terms of judicial effectiveness, we can obviously relate it to the current funding realities and all the other challenges that the institution has been facing in spite of their attempt to undertake various reforms. So that would be my response. And then the last thing that I'd like to respond to before I allow Leo would be, on, I think Thomas as well asked, economic freedom of individuals, or when we talk about this economic freedom, is it of individuals or corporations? And in my view, I would say it's a merge of both, even though more likely, more of the individual. So if you look at how we had defined economic freedom and how the institution has defined it, it's defined as the right of every human to control his or her own labor and property with as limited restrictions as possible from government. So in this instance, it's mainly the economic freedom looking from the perspective of the individual. However, if you look at some of the indicators, there's key consideration for corporations, and actually they've some of the data that is provided in computing this index is actually feedback from business organizations and other entities. But I would say basically the greater focus is on individuals. And I would also say here that if you look at again how the index is computed, it's basically it's a statistical assessment of and also a qualitative judgment given feedback from experts, from business people, average citizens. So in that way, it reflects views of different categories of people, but also of entities. So it's a merge of the two, but I would say, in my view, that it's mainly primarily points to perspectives from individuals. So I would like to respond to those and ask Leo maybe to respond to the questions on fiscal health to provide more information. Thank you.
Yeah. So I'll respond to questions by Paul, Musa, Thomas, and Michael. Over. First on Thomas, that whether China's ranking has impacted growth the way we say it will for Kenya. Yes, it will. First we need to be circumspect about this. China is ranked in judicial effectiveness, ranks 71.5, which is mostly free. In tax burden, it ranks 72.6, mostly free. China on business freedom, it ranks 80.2, mostly free. Trade freedom, it ranks 71.2, mostly free. Where China ranks low is on investment and financial freedom, and also on government integrity, because corruption at all levels in China remains endemic. Also, on the issue of investment and financial freedom, the foreign investment code as serious challenges, because the way they protect, it remains restrictive. It also lacks lacks transparency, and so even if you compare, for example, trade freedom, China has 15 preferential trade agreements in force. We have 2. China has 397 non-tariff measures in effect. It will affect. If you look at fundamentals like index, the way it's measured versus China. Even for example, an issue of fiscal health, China is ranked 54.8. We are ranked 12.6. Relative to the size of the income, China spends 9.4% of their domestic income. We spend 18.2. We spend double than that. Public. So if you look public debt as a share of GDP, they are 54.4%. We are at 70.4%. Fiscal deficits, the last 3 years, it has averaged 5%. We are at 7.7%. So China, to compare, when you compare China and Kenya, you compare by each factor, and also by the way they so you compare a like for like, I think, and that one China will affect. So the questions by Musa, the World Bank index is of doing business. The 21st, so as Jackie had explained, these are two different indices. What the other one measures and what this one has. This one measures economic freedom. The other one measures ease of doing business, and even the different factors that they consider, the different statistical data they consider, is entirely different from the other. Also, to comment and say that even and perhaps maybe our colleagues in the regulation could consider that explaining that World Bank index. So, and our purpose was not to say Kenya is bad. There are things Kenya does very well. There are things Kenya have challenges with whether they are simple challenges or systemic. This one is to improve. Yeah, even because whether they factor regional arrangements, the guys at Heritage continue to count and factor in. Once the SCFTA came into force, that is when they start to count from there. And also, Kenya does well on issue of trade freedom. So in China, comparatively, for example, compared to China, almost at the same level. Paul, the issue of fiscal, whether including fiscal health, excluding fiscal health will affect the score. Definitely yes. That one is mathematical. The second question you had was whether we have huge fiscal deficits. If we have fiscal deficits, but we use them on productive projects. Then when you mentioned that, I remembered one of the things. Kenya's fiscal multiplier, for example, for specific sectors, fiscal multipliers, and how because we all now understand how the fiscal multiplier works. That an investment in fiscal policy of certain amount creates an equivalent in GDP growth of that nature. If you look at Kenya's fiscal multiplier, for example, in health, the health project, for example, for the health sector, it's some studies point to that it has, for example, health sector has a negative 0.8, and they put some of these studies point out that this fiscal multiplier, because of inefficiencies, corruption, embezzlement, that kind of stuff. Secondly, if you look at literature, economic literature around the issue of fiscal deficits affect savings, both private savings and national savings. Fiscal deficits also, if you run them for a longer period of time, affect private investment. That's why if you look at the public expenditure review for 2017 that was published by National Treasury, our contribution from private investment to GDP declined because we've been running fiscal deficits consistently for a longer period of time. And I can give you a practical example. If I have $1 million, for example, now, and I'd like $1 million to put in investment, but for example, would I go? You can ask yourself whether, for example, would I give government would I go for the T-bills and T-bonds, or do an investment plan that you can get with doing everything, but still get a return of like 3%, return on capital of 3%, whether I'd give it to government and get a return of 6, get a return of 6 and not do anything about it. So fiscal deficits affect the investment climate, and it affects our capital factor accumulation, their capital factor accumulation. So the economic literature, if you look, and for example, I can point out to you a paper, for example, by Lawrence Ball and Mankiw, and I think this paper was done in 1995, and no other papers disapproved of the same move, especially around fiscal deficit. So fiscal deficits are a problem. That's why after the government of Kenya doing all that, we are in an IMF program, and especially an extended fund facility that will help us iron out structural issues that arose from undisciplined spending. And this undisciplined spending came from those fiscal deficits. We were biting more, we were borrowing what we don't have and kicking the ball into the future. So fiscal deficits are a problem. Another question by Michael on the 2010 Constitution, and we should elaborate. So the setting, the constancy and predictability of economic policy, and generally how the state regulates the openness of the market, all these kind of things matter a lot. First is a constitutional guarantee, but it goes generally to further and say that we need to, it's an enforcement problem. How we enforce, how we set out stronger institutions for the case, in this case, the case of parliament, to enforce, because the issues of property rights, judicial effectiveness, because like the reason why Kenya has a low score in judicial effectiveness is because of weak institutional capacity, which is resources. And resources, for example, if government of Kenya was to, if parliament was to consider and give judiciary like 20 billion, that would mean a lot in case resolution and how it affects case backlogs, even appointing judges, those kind of questions. So it's a question of enforcement. Just like, you can have a very good written charter, constitution, but if it's not enforced, and even that growth in the constitutionalism could not happen. So, and what index should a country pivot? I think most people can say everything, whether that like index of this index of economic freedom is conservative, but its data and its methodology is robust. It's robust. And these are guys who count things that if the tax, for example, when they rank the tax burden, they look at the marginal tax rate. If it's 30%, it's 30%. Like you cannot. This is not something that changes. It's not a goal. This is based on Kenya statistical data. If the public debt, the numbers are there, and these are public, and these are numbers which are open there. If it's a question of fiscal deficit, the numbers which are open, all these questions. So if it's about non-tariff measures, if we have 53, we have 53. It's not like the other countries which have more, like for example China, which has 397. So it's not. This is publicly available data that can be verified, but still it's also robust. So question by Namu, whether digitization of government services has helped. It has helped. That one, the e-citizen works efficiently, and it has it has reduced that, like because corruption we are speaking about in access of public services is extraction of rents. What public servants used to do in the past is they delay a service, they give you excuses here and there. This one, when the approval largely is dependent on the system, it is removing barriers, and it is removing opportunities for persons or public servants for any person to extract rent from it. So on that, the government of Kenya has made progress. But on the other hand, there is now the larger part that the money that is lost through fiscal policy, and in this case, public spending, over the years has grown at a faster rate. So that is now the bigger side of the problem that even the president himself lamented about. Yeah. So I think I've answered most of the questions, not all of them. So yeah, back to you, John.
Yeah, thanks, Kamboi. I think I see Kwame's hand up. Kwame, you want to? Hello.
Yeah.
Yes, Kwame.
Okay, fine. Thanks a lot. Thanks, Jackie and you. I just wanted to say that. So there's a question about whether this index measures individuals or corporations. To be honest, that's neither fair or very informed question, because corporations are actually also associations of individuals. So if it's about freedoms for economic pursuit of economic objectives can be as an individual or in the form of corporation. So so for that reason, that distinction is an artificial distinction for the purposes of measuring economic freedom. The second point is, it might be true that we think that the labor focus may be focusing entirely on the rights of corporation, but that's not true. Even individuals actually hire people. So you can hire people if you have a sole proprietorship. You can have a business in which you hire people. So I think maybe that's a very fine distinction, but I don't think it's a distinction that makes a difference for the purposes of economic freedom. So that's one. The second thing is, I think we are belaboring the question about doing business. So let's ask ourselves from the explanation of the methodology. And Jackie explained what exactly economic freedom is defined as: allowing a person to operate economically within the legal constraints that are provided, with very little or minimum restraint from government. So it does not assume that there will be no restraint. However, doing business actually measures what it takes a firm to conduct business throughout the business cycle. So one is entirely from a corporate perspective, which is basically operating a business. And for that reason, it's basically registration, how you get your power connected, how long it takes you to return your taxes, to fill and to return your taxes. So one of them is a corporate focus about what the business operations are, especially with regard to government. How a business that wants to operate in Kenya does business, and how government facilitates or does not, or how government regulations might hinder that. The other is basically in economic freedom between one individual or groups of individuals, whichever business formation that they choose, and how government, the economic freedom of that individual or those groups of people. So really, one is measuring business operations as operations are done. I think the other is measuring the rights, inherent rights that one individual might have, measured across those 4 big pillars and the 12 indices. So I think we need not to mix ourselves up, because otherwise we'd actually be comparing oranges against apples. It's not comparable at all. And for that reason, I don't think that we should ask whether what is to be chosen and which is not. So if you look at the doing business, some of the countries that actually do very well, for instance, Russia came from, I think, 130 to about 55. I don't know who's investing in Russia, to be honest, notwithstanding that. So I would think that in terms of comprehensiveness, the economic freedom index of economic freedom is actually more comprehensive. Finally, why is it important? As Leah has mentioned, to say that a methodology is robust is a polite way of saying that it's been tested econometrically, but also remember there's a qualitative part of it, and it shows. So it shows, for instance, that countries, so if you look at the countries in Africa that do well, on the one side, of course, Mauritius is fast, then Botswana, and they tend to be smaller countries, which is clear why. Many small countries have no option but actually to open up, because governments can't be too big. They open up the economy and allow far more freedoms than other countries that tend to be larger tend to do. So obviously there's some geographical bias, but even when that is controlled for, you see Germany, the US, and other big countries also in the top 15. So the reason I'm answering this is because people are asking why did the IEA, and I think my colleagues have spoken about it. We think actually it's one of the most comprehensive, and one, it will tell you quite a lot about how the government of Kenya and progress. But the final thing that really concerns us, and which I close John with, is the idea that Kenya was actually ahead of very many countries. Kenya's score in 1996, when this first, 1995, 94 rather, when this was first published, was actually above the average. Since then, it's gone down quite substantially, including in the administration of President Kibaki, which was one of the best. Now, what that means is not necessarily that Kenya is not reforming. It's simply showing that many other countries are actually making far more radical, if I may use the word radical, reforms than Kenya is. So Kenya seems to be mark timing. And if you look at Kenya's IEA's regulatory program, it's showing that actually since the year 2000, when the government of Kenya made the decision to actually liberalize and privatize, say, Safaricom and many other firms, this government has made no decisive and concrete economic reforms towards liberalizing the economy. And I think that's part of what it shows here. Thanks a lot, Jackie and Leo.
Yeah, thanks, Kwame, for those additions. Now, given that I think we are way past our scheduled time, and let me see whether I think there's some extent. I don't see any additional question, so allow me to ask Jackie and Leo to make their final remarks here. Kemboi, let's start with you, Kemboi, then we can go to Jackie.
Yes, so for me, and I need to emphasize that for Kenya to make strides, and it has to expand economic freedoms. For Kenya to make strides in economic growth, it has to advance those kind of freedoms. And the issue on the fiscal policy side matters a lot, and it's not, and the way because I still remember now from my Econ 101 that the economy is a system, and it's a reflection for these economic freedoms. It's 1, 2, 3 issues spiraling to become a bigger problem. So it's not one issue that explaining all factors in the economy. So that's my conclusion, John. And thank you, viewers, and thank you to the audience for the insightful questions. It's a good thing the quality of these webinars depends on those insightful questions. Thank you so much.
Okay, thanks, Leo, and thanks, John, and thanks, everyone. So in conclusion, I would just like to restate that this index is important. It provides significant opportunities for all the countries that have been ranked to improve their economic performance in the indicators or along the factors where they scored the lowest. So for any country that is considering making any economic reforms, I think this index provides very useful pointers, given that the scores indicate in what areas countries would require some improvements, or in what it actually points to what are the significant constraints to economic growth in for different states. So basically, I would just like to urge all the actors in this actors in the policy-related fields, all those who are present in this meeting, to basically consider using this evidence for formulation of more responsive and progressive economic policies. So thanks again to all the participants for your useful engagement, and thanks, John and everyone, and have a good afternoon.
Yeah, thanks a lot to Jackie and Kemboi, and to our participants for this very enlightening discussion that we've had. Of course, you will post this presentation on our website immediately after this. So feel free to visit our website, and you can actually download it. Whatever question may not have been answered, we'll respond and post those responses on our website as well. I know I can see Kisimbi was I think the most active participant. And given the stuff that you've mentioned, I think after this we'll think of writing a blog blog and just to try and share some more insight on this index, as well as try and respond to some of the questions that you posed. Otherwise, thanks a lot and have a good afternoon. Bye-bye.
Kwaherini. Thank you very much.
Bye.